Welcome to the System Simplified podcast, where we feature top leaders who share stories on how to successfully systemize a business. Now, let's get started with the show.
Hello, Adi Klevit here, the host of the System Simplified podcast, where I feature top founders, entrepreneurs, and thought leaders about systematizing a business. And today's episode is being brought to you by Business Success Consulting Group, where we create, document, optimize, and implement processes and procedures so businesses can grow and thrive. And today's guest is Channing Hamlet. Hi, Channing.
Hey, how you doing? Thanks for having me.
I'm doing great. How are you doing?
Pretty good. Yeah.
Good. I am excited about our conversation. We met at a conference that is called Deals Exchange, and you are all about merger and acquisitions, M&A, and you're an expert in that area. So I'm sure a lot of our listeners will gain a lot of information from our call today in terms of preparing the business for sale. What does it mean? And we're definitely going to touch into having the right processes, having the right infrastructure, and how that helps businesses thrive and do better. So first of all, I'm going to read your bio so our audience will know exactly who you are. So you are the co-founder and managing director of Objective Investment Banking and Valuation, where you help business owners maximize the value of their companies through strategic sales, private equity partnerships, and valuation advisory. With more than 25 years of experience in M&A and valuation, you frequently help business owners and operators identify their company's values, drivers, and detractors, provide a clear roadmap to position the business for a premium sale, and run the sales process designed to achieve optimal outcomes.
I'll have to bring you along with me to my next talk and have you do the introduction. That was great.
Yes, and that sounds amazing, right? I mean, I know every time my bio is being read, I go like, wow, how you should, I understand. Wow. So I can be your PR publicist, no problem.
Yeah.
So Channing, let's talk about businesses, entrepreneurs, they have a business, they have a dream to sell one day, to exit. Where do they start?
Yeah, I mean, I think there's a couple things, like, having worked for a long time with business owners, and my experience is mostly with owner, operator, entrepreneur, founders, and family businesses. And so these are typically people that have built and worked in their company for a long time, but have not really taken outside capital or had experience doing transactions in the past. And many of them don't really think about setting themselves and setting their company up for sale. And what I've learned is there's four things that, in order to have like a premium outcome in an exit, there's really sort of four things a business owner or a group of business owners should be looking at. One of them is making sure they're personally clear on why they want to do a transaction and what they want to do next. I think for themselves, for their family, for their stakeholders, et cetera, like, hey, I've my whole identity is tied up in building and running this company. Like, what's next, and how is this going to affect all my stakeholders? I think that's not something that's like easy to figure out on a Friday afternoon. That takes like real thought and effort. The second thing is really diving deep on tax optimization. There are a lot of ways to maximize the cash that winds up in your bank account when you exit. And that's really, for our audience, that's really what's important. And when you think about how hard it is to grow the value of a company, 10%, 15, 20%, and how easy it is to sign a piece of paper that changes tax things, or has this strategy or that strategy, and there's a lot of complex planning and sophisticated planning that can take place. Signing a piece of paper is a lot easier than the hard work of optimizing a company. And so really putting the thought and effort into being set up from a tax standpoint is important. And then the third one is sort of personal financial planning. A lot of people use their companies as a piggy bank, and the company pays a lot of their expenses. They don't that they're used to getting a paycheck every month, and they're going to go from running a business and managing a business to running or managing money and having a clear understanding of what that means. Like, I'm going to sell my company for a big number. I'm going to pay some taxes. I'm going to wind up with a smaller number in my bank account. Does that support my objectives? Does that support what I'm trying to accomplish with my life? And, what does that look like? And, I think when a company is going to sell for like $1 billion, you don't need like too much of an advanced degree to know that's enough money to support yourself. But when a company sells for 50 million and there's one or two partners and there's some debt that gets paid off and there's some taxes, when you look at what's left, people need to have a pretty careful financial plan to make sure that works. And so this financial planning element is important. And then the fourth thing, which is really where my expertise comes in, is like, hey, let's make sure the business is ready. What are the things we need to do in the business to make sure the business is ready? And then I break that down into two areas. One would be value drivers in the business, and then another one would be what I would call salability factors. Like, are there things about the business that make it difficult to sell? And so thinking
Well,
about
let's
both of
talk about that. I mean, I want to talk about both of those. So, but left the value drivers and this what makes the business sellable. But I like to actually ask you, like, hear from you, like, what are the things that might not make the business sellable?
yeah, I think it really comes down to this concept of transferability. So, is the business transferable to a new owner without an undue amount of risk? And so that really is the thought process. And I think a lot of business owners and entrepreneurs sit there and they're like, "Hey, I've been running my company for 15 years, 20 years, 25 years. Like, this is easy. Anybody could step in and do my job." But they discount their importance to the business and the knowledge they have in their head and the comfort they have with certain risks. And an outside buyer is sitting there saying like, "Hey, I'm going to write this person a big check to buy this company. Like, I want to make sure I get the benefit of the company. So if there are any big risks in the business, if there are any big risks in the business, that makes it harder to buy the company. And there's some obvious ones, like if you have one customer that's a big part of your revenue, or you have one vendor that you rely on, or you have like one or two key salespeople that you rely on, or any sort of concentration risk where if one person makes a decision and a big part of the business disappears, that makes it hard to sell a company. It makes it really hard to sell a company for cash up front, because the buyer is going to put some structure around the deal to mitigate risk. And so, like, really thinking about concentrations and mitigating those is really important. So that's one sort of area of
I
risk
have a question on
factors.
that. I mean, it's a little bit from the other angle. Like, if you were a buyer, what would you ask in order to see if there is actually a concentrated risk like that?
I mean, most buyers will look at revenue by customer over 3 to 5 years. They'll look at spend with vendors over 3 to 5 years. They'll look at sales by salesperson. They'll scrutinize and really kind of look for those things.
So if you have
Um,
that situation in a business where you have like the majority of your sales are coming from a salesperson, how do you mitigate that risk when you're putting it on the market?
um, I think that's an interesting question, and that's not like easy to do. And again, I think this idea that I said earlier is like planning well in advance. Um, is important, but a lot of people don't even recognize that they have the risk or really think about working on it until they decide to sell their company, and then it's too late. And so if you know you have that risk and you want to sell the company at some point in the future, how do you mitigate that risk? Like in your example with the salesperson, maybe you put a really good retention package in place for them so that they have a strong incentive to go and work for the new buyer, and the new buyer gets comfortable that they're going to stay. Um,
But
maybe
even in
you
general, I mean, that's what
maybe
we
you
are.
you hire some other salespeople and try to
Right.
spread the risk. Et cetera, et cetera, et cetera. There's a number of things you can do. There's a number of things that you can do and think about, but I think it's like recognizing the problem and then recognizing the issue and then coming up with, solution or solutions and then having enough time to actually implement them is important.
I think it's a very good point because there should, even if you're not selling, I mean, the business right now, as you said, you have to have enough time to look at it. It's good to analyze where the risk comes in. And if you have, even if you don't want to sell the business, but if all of your sales depending on one salesperson, when it's kind of like the bus analogy, right? I mean, what if that person gets run over by
Yeah.
a bus, or got a better offer from your competitors, or something happens, or who knows what?
Hmm.
That's where that's what, like, for us, it's the mitigation part, is having good documented processes and procedures. But to your point, you can have that, but then you should actually hire more than one person. So the knowledge is not in
Hmm.
one person's head, and that's it.
Yeah, and I think I think there's a couple other like big, risk factors, whether it's um, having sloppy accounting, in your area of expertise, sloppy processes. If you can sit down with a buyer and show like, hey, I've got a management team in place that's going to work for you. I've got my accounting really dialed in. So as a new owner, you're going to understand what's going on in the business. I have all the processes documented and followed so that you will be able to manage the business. You don't need 25 years of like all of the stuff I know that's in my mind. It's like it's written down. People follow it. If this person leaves, I can replace and train them with another person. When I do this, I expect this outcome. When you have things really systematized in the business, it's a lot easier to transfer the value to a new buyer. And if you want to get paid for the value of the business, you need to demonstrate to them that you can transfer the value to that buyer. So the more the more you engineer the risks out of the business, and the more you systematize it so that someone can clearly see how to operate the business, the easier it is to get them excited about it. And then, if you get them excited about it, they'll pay more.
That's exactly right.
So
Exactly
yeah.
right. So when is the right time to actually
And
contact you?
I had a client a number of years ago that had a contract manufacturing business. And from the outside looking in, it was a really interesting business in that they were doing small production runs of like really complex medical devices. And they had the who's who of customers in the medical device business and long-term relationships. And it was like a really good business. We had a good offer from a buyer. They came in to do due diligence and they discovered that the way the company got their clients was they would get hired by a big medical device company to design a new product,
Hmm.
and then they would get a prototype working, then they would get the contract to do the first production run. And so when the buyer came in and due diligence, they found out that the owner was like the only person at the company that had the capability to design new products, and was like this whiz bang genius engineer. And so while it was a good business from the outside looking in, the buyer came to the conclusion that when the owner left, the next batch of contracts were going to be hard to come by unless they could replace that design genius. And so because he had never really engineered and built the design team, he had a business that he couldn't sell, or he couldn't sell for very much money. And so that's just an example of, had they put the systems and processes in place and built a team around it, it would have been a business that would have sold for a very nice price. But that issue was never really recognized and worked on. And I think the business wound up not selling at all, just as an example. I know you
Wow.
just asked me a question and I didn't answer it, but
I
like
think you did. Well, I asked you the question of
that's a
like
short
how
attention
early,
span.
but it seems to me like,
Yeah.
it's like they can contact you as early as possible, because that's the time to do it, right? Because then you can
Yeah.
have enough time to actually prepare things and making sure that things are in place.
Yeah, I mean, I think I would encourage business owners that want to have an exit to really put some thought into that and talk to a lot of outsiders. Um, you know, like getting a formal valuation or appraisal done to understand like, hey, what drives value in my business? What is my business worth? Talking to your CPA about if I sold my business for X, what would my taxes be? Talking to some financial advisors to start to get smarter about what does it mean? And then on the business side, investment bankers like myself will do a lot of work for free up front, helping you think about what your company is worth, who you would sell it to, what are the changes you need to make it worth more, how should you really be prepared. You can meet with investment bankers and so on and so forth, who all want to create a relationship with you, and so they can be there to help you when you do the ultimate sale. And we've had some fantastic successes meeting with companies 3, 4, 5 years before a sale, and helping them think about the pieces they need to put in place to have a premium outcome.
That's
Um,
incredible. And
and
I really think also that it's good to run your business as if though you're thinking, well, it has to be in good order. So if I have to sell it tomorrow, it's ready. It's a better way. It's kind of like when you have a home and you live in it and then you want to sell. So all of a sudden you do these renovations and you look at it and you go like, why did I live the
yeah,
way I did
exactly.
before I renovated, right? I could have renovated it and live in a
I,
very nice, comfortable life here.
yeah, I think I have a couple thoughts on that. I think the first one is 100% of business owners are going to exit at some point, whether it's death, disability, divorce, distress, or like my favorite one, which is by design. There's one of those D's that's coming. Hopefully it's by design. And so, really keeping that in mind and thinking about it is important. And then I think the second thing that's happened, is in the market I tend to work in, which is companies that sell for maybe between 10 or 15 million up to 100 million in value. Um, Private equity firms are a large category of buyers there. And they've raised like $1 zillion over the last 2 decades, and they have so much money to invest that they are proactively reaching out to companies. And so a lot of times, like business owners get a call that's something like, "Hey, Channing, I saw your business. We have an investment in a similar company. Like, we need to own you." And so, to the extent that you're actually ready and you have your documents organized and you've done some of this work, um, when that's when you can sell for a premium when someone really wants it. And so, so being in this market where there's a lot of money chasing a smaller number of deals, when someone's interested, that's like a really good time to consider a sale process, because you have a high likelihood of success. And the more ready you are, the more successful that will be. And then the third thing is exactly what you said. My wife and I just cleaned up our house because we had a big holiday party. And it was like, wow, why don't we just live like this all the time? This place is really nice. We put everything away, we got it organized. I think if you do that with your business and it's easier to run, it'll just be a more enjoyable experience all around, even if you don't sell it.
I agree. I
Yeah.
agree. And as you said, at some point you're going to exit anyway, so you're
Yeah.
ready for it. That's
Yeah.
amazing. Channing, if our audience would like to reach out to you, how can they get a hold of you?
Um, I think my contact information is on our website. It's objectiveibv.com. And we're absolutely happy to have, intro discussions to talk about the sale process, talk about the value drivers, talk about the risk factors, et cetera, and help think about what a sale would look like and what the timing is and mapping that against objectives. And then we also have a lot of other resources that we can bring to the table, whether it's other advisors like CPAs or financial planners, et cetera, et cetera, et cetera, to help with all four of the things that I talked about at the beginning of the conversation.
Amazing. Okay, good. Well, we also will include it in the show notes. Well, Channing,
Mhm.
thank you so much for being a guest on this podcast.
Yeah, thanks for having me. It's always fun to offer some education and guidance, and it's always, I would say, painful to work with a client that has like a high desire to sell, but isn't quite ready and either can't sell or leaves money on the table. So the more I can help people up front, the better the outcomes all around.
Absolutely. Well, thank you so much.
Yeah, thank you for having me.
Thanks for listening to the System Simplified podcast. We'll see you again next time, and be sure to click subscribe to get future episodes.